Hello and welcome to week 3. So week 3 is all about private versus business. So what I mean by that is there are a lot of private expenses that the business may have paid for, which you'd hope to have coded as drawings. Alternatively, there could be private expenses that you're able to claim as a business expense, and therefore we have to add all these up and pass them on to the accountant to make the right adjustments. So then there's the other way where there's business expenses like a company car that is available for private use, and therefore there's an adjustment that needs to happen there. So at the end of the year is generally when the accountants do the wash up and make journals and adjustments accordingly. So the first category we'll go through is the motor vehicle expenses. So for those that don't have a vehicle or don't use one for any part of their business, then it's not an issue. However, if your business doesn't own a vehicle, but you do work-related travel, not just heading to work and home or to your business and home, that's not considered a business expense. That is a normal private expense that anyone has in a normal job. But if you travel to clients, consultants, you're a consultant and you go, like for example me, I go up to Auckland, so I am able to take a mileage and claim an expense part of that back for the costs I incur for that part of the business. So if you have a vehicle that you do use for business purposes, then you need to be carrying a logbook. Your accountant can advise you further, but basically there's some pretty strict requirements as to how you can claim and what portion. And below I'll have a little worksheet where most accountants will require that information for their books, and they'll ask you any further questions if they need. The other one is if you have a company car but you are using it privately and weekends at night. So the rule with IRD is not that you may not be using it, so therefore you don't need to, so the business can claim every single expense on your business car. But if it is available for private use, then it is subject to fringe benefit tax, FBT. So there are lots of rules around that. So if you haven't had specific advice regarding that, then I would probably talk to your accountant. Otherwise, we can delve into it more on a call. It's usually very specific to each person in their business. So if it is a company car and it is available for private use, it is subject to fringe benefit tax unless it's not available for private use and it's only business. So the other things are, for a lot of people like me, is that we have a home office, and it's a dedicated space, and this is the IRD rules. It's a dedicated space for the business. So it can't be the kids' room with a desk in the corner, as per the rules anyway. So that's how they stipulate it to be able to claim anything. So what you can claim and what your accountant will work out for you, you don't need to work out the specifics. What you do need to do is get all the expenses relating to your home, which is in the checklist below, they'll then be able to do a percentage adjustment for and apportion some of those costs as a business expense. And the reason we do this, when you think about it, well, what does it matter? The reason we do this is you've got your income and your marketing expenses, your phone, whatnot, that if you were to go and get an office in town and spend $300 a week on a lease for an office space, then that's a real expense and it's a business claim. But if you're at home, there's no specific just for your office, so it needs to be apportioned over all the other expenses of your home, because there is a real cost involved in working from home. So things that your accountant will require, and they should have a list on their questionnaire, will be things like the rates invoice, your insurance, so your building, your contents, all of that, your power bills, so they can work out what percentage and dollar figure they can claim, the repairs and maintenance on your property, and the interest you're paying on your mortgage. So all of that can be included. Also things like your internet, your broadband, because predominantly you could argue 80% of the time it is actually used for business purposes. The other thing that they will ask, if this is your first year in business or subsequently, there might be a little thing where it says your meters, your square meter of your office. So you will have to step it out or get the plans and have a look back as to what. So for example, if you had a 100 square meter house, a smallish 3-bedroom house, and you had your office space, which was 10 meters squared, then you were able to claim 10%, because it's 10 of 100, of all these other expenses that relate to your property, because that is the real cost of running that office in your business. So that's how it's worked out there. So then there's might be some other things that you may pay for privately out of your personal bank account that is actually a business expense. And things that spring to mind, which is in my situation, is I've got my phone plan coming out of my our home account, and the internet and things like that. So I'm able to put that into that private use, but with the phone, I'm able to claim 100% as a business expense because I need it to operate my business. So I would have to make those adjustments, or at least provide all of the invoices for that year that it hasn't been coded into my business expenses on zero. So it's your motor vehicle, your home office expense, and any business expenses you pay for privately. Anything you've paid for on the business that's private needs to be coded as drawings. So if you've got any other questions, obviously, again, regarding this week 3 topic, then make sure you come over to the Facebook page and jump in under the post about week 3, and I can answer, or come to one of the live weekly Q&A sessions, or send me a question in advance. Then we're going to get on to week 4, which is all about risk. I know, super fun. So I will see you then.